If you want to know how I structure both my personal and business budgets together, then keep watching because what I'm about to show you has completely transformed the way I manage money, and it's something I wish I had figured out years ago. Stick with me because by the end of this video, I'll reveal the one budgeting trick that almost no one talks about. But it's honestly a game changer. Here's the truth. Managing both your personal and business budgets at the same time can feel like juggling flaming torches while riding a unicycle. But I've learned the hard way that it's all about creating a system that keeps everything balanced without making you feel like you're constantly on edge. First, let's talk about the foundation. The number one thing you need to understand when merging your personal and business finances is that they should never be treated the same. Yes, both are about managing cash flow, but they operate differently. Personal budgets are about survival, paying bills, putting food on the table, saving for the future. Business budgets are about growth, investing in opportunities, scaling operations, and ensuring that your revenue exceeds your costs. So, how do you bring these together without creating chaos? You create separation, but with a system that talks to itself. For me, this is where the magic happens. I use a dual accounting method. My personal accounts track my lifestyle expenses, everything from groceries to rent to my personal savings goals. But my business account has its own set of rules. It tracks business expenses, reinvestment plans, and future projections. Here's the twist, though. Both accounts should feed into each other. The goal is to pay yourself from your business. Instead of letting your business run wild, I've set up an automated transfer system where my business directly deposits a set amount into my personal account every month. It's not just about taking money from the business for personal spending. It's about creating financial habits that don't force me to dip into the business's operating budget. This separation ensures I can focus on growing the business without worrying about short-term cash flow issues. Now, I know what you're thinking. How do I track all of this without losing my mind? Well, this is where accounting software comes into play. And I'm not talking about the basic free tools you see on YouTube ads. I've been using software that's specifically designed for entrepreneurs, and trust me, the right tool makes all the difference. Tools like QuickBooks and Xero make it so easy to separate and track both sets of expenses, while at the same time pulling in data that helps me make better decisions in real time. This is key. The software doesn't just record expenses, it tells me when I'm off track, before I'm in a crisis. Here's where the real gem is. I've learned that your business budget should always prioritize reinvestment. If you're not allocating a portion of your revenue back into the business, you're essentially putting a cap on your growth. This doesn't mean you throw all your profits back into the business without thinking, but it does mean setting aside a percentage that goes straight into expansion. And this brings us to the next key principle: forecasting. I use the data from my business accounting tool to forecast what my business will need in the next quarter. This allows me to predict not just expenses, but personal cash flow needs as well. So when you're budgeting both together, always keep an eye on what's coming, not just what's happening now. I'm going to share something with you that most budgeters get wrong. If you're not tracking your emergency fund for both personal and business needs, you're setting yourself up for a problem. There's no way around this one. I recommend setting aside at least 3 to 6 months worth of personal and business expenses. Why? Because when an emergency hits, the last thing you want to do is scramble to make ends meet. I learned this the hard way, and now I never skip that step. And finally, the one thing that changed my entire perspective on budgeting: tax optimization. I cannot stress this enough. When it comes to structuring your personal and business finances, taxes will always be a factor, and they'll bite you if you're not careful. This is why I allocate a percentage of my income for taxes as part of my monthly budgeting. It's better to set it aside now than have to deal with a huge tax bill at the end of the year. And for business owners, taking advantage of tax deductions for operational expenses is key. It reduces your taxable income and, in turn, your tax bill. So, how do I wrap all of this up? It's simple. Separate your personal and business budgets. Use software to track everything, and always leave room for reinvestment and emergency funds. Those are the non-negotiables that keep both your personal and business finances working together smoothly. If you found this video valuable and want to support content that doesn't have hidden affiliate commissions, make sure to subscribe. You'll get even more content that's focused on giving you solid, practical advice without any hidden incentives.